US30 is extremely hard to find a profitable strategy with, but I can show you a very simple strategy in this video that you can apply as soon as tomorrow. But before we get started, make sure you guys have liked this video. As well with that, make sure you guys subscribe and turn the notification bells on so you know when I post. If you guys do want a free forex training, I did create one. There should be a link in the description. And also with US30, there are specific brokers to use. I did link a broker for you guys to use in the description. And hey, if you want to learn my exact US30 strategy in depth and get one-on-one mentorship from me, I now opened up my one-on-one mentorship. Make sure you DM me on Instagram to apply, and let's see if you're a good fit. Now without further ado, let's get into the video. With US30, there are a ton of strategies. I think the easiest strategy, and really it's not so much a strategy, it's pretty much mandatory, is showing up at the right times. Now we need to understand the whole feedback and the whole idea with US30. US30 is the Dow Jones. You really can't margin trade the Dow Jones. So for us to be able to trade the Dow Jones is very, very awesome. But the Dow Jones is consistent of the top 30 companies in America, like Amazon, Tesla, all those companies. You can go on Google and type in Dow Jones, the top 30 companies in it. That's why it's US 30, because it represents the top 30 companies in America. Now, the next thing that we need to understand is when the equities market opens up, which US30 is basically is an equity and index fund. The index funds and all the stocks and the equities, they're moving at a specific time. Now that time is 9:30 a.m. EST, because I wish the stock market was based in California and the time is 9:30 over here and 6:30 in New York, because it is honestly sometimes really hard to trade at 6:30 in the morning with US30. And we need to understand that like the movement is going to be occurring at 6:30 a.m. PST, 9:30 a.m. EST. And that's because that's when the stock market is opening up. Now you guys need to think of it like this. When the stock market is opening up, that means all these funds are going to be fluctuating in and out of the market. And that's why we see at 6:30 these massive moves happening extremely quickly, because the markets are now opening, the market bell, whatever bell goes off, that's when the funds are being transferred in and out of the market. So when we see the market push up like this very quickly, that's when we know we're actually trading at the right time. And you guys don't want to be trading during the London session. Like a lot of traders might be like, oh, I trade during the London session with US30. I trade during the Asia, but look at the moves that are occurring during the Asia session and the London session. And then look at the move right here, just within this one 15-minute candle. This one 15-minute candle is shot up in probably less than 15 minutes, since it did have this wick right here. It shot up 1,200 pips. So that's what I'm telling you guys. The best time to be trading US30 is right at 6:30 a.m. That's when all the liquidity, aka money, is being flushed in or out of the market. So when we're seeing the market push up like this, that means that a bunch of liquidity is being inserted into the market, and that's why it's being pushed up. Now, when we look back when we were in a downtrend, like right here at, well, let's find a good day. Like right here, that's a choppy day too. I need to find a downtrend day, guys. I'm trying to look at 6:30. Okay, here's the 6:30 right here. So it shot up, then it shot down and kept going down. That means a lot of liquidity is being taken out of the market. So it's really looking at the different ways of trading US30, whether you're going to go long or you're going to short. Long means we're buying, short means that we're selling. One thing that I really like to do when I'm looking at these specific times though is I want to look for like certain patterns in the market. And this is the easiest way of looking at the market. So I'm going to write it down for you. So let's type in market trading patterns. If you see an A or you see a M, that equals a sell. If you see a V or W, that equals a buy. Now, you're probably asking, Colt, what do you mean by an A, an M, a V, and a W? I want you guys to notice that the market has these patterns. And another way that you could put it is like hills and valleys, just making it very, very simple. But I want you to grab this tool right here. And I'm just going to do like some hills and valleys, or you can do A and V patterns. But right here, this is a V pattern. And we can see that we already had, before the market opened on this candle, we had 3 bullish candles close right here. So the momentum before the market opened is already pushing up. So we're seeing the bullish volume start to come in. So what I'm looking at a lot of the times, like these A and V patterns, these M and W patterns, and we can actually construe this as a W pattern right here. Went down and up, down and up. And usually when I'm looking for like these V patterns or A patterns, I like to catch them at the bottom. So with this V pattern, I want to get into a trade like right before the V pattern continues to go up. So as I'm looking at this V pattern, I have the left leg of the V, and I want to look for like a reversal candle, a continuation candle, anything like that. So we can see that at 6:15 and 6:30, we have that continuation candle right here, a spinning top. And I want you to look at this candle. It's kind of hard to circle. This candle right here that I circled, this one, that's called a spinning top. And candle recognition with these market patterns is going to play a huge part within your success for your trading. Now, this is the thing. You guys don't have to trade every single day. And a lot of you are showing up every single day. You're trading like 5, 10, 20, even like 100 times a day. My buddy that I used to kick it with, he trades US32, and he told me one day he took 100 trades. Now, you need to understand the emotional, there's no emotional stability when doing that, because you're getting this short-term high. You're buying and you're like, oh, I'm up $10, and you're selling, and then you lose $20 and you buy again, and you're like, oh, I'm up $30, I'm in profit now, $10, and then you sell, you buy, and it's really hard to maintain a consistent profitable day, week, month by doing that. So when I'm trading US30, that's why I focus on like these higher time frames, because I'm not rushing in and out of the markets like you would on the minute 1, the minute 5, time frames like that. And that's why I kind of veered away from the minute 5, because it was really high pace. And my emotions, I noticed that my emotions were just going haywire. They're on and all off the wall. So when you're looking at the market, guys, really focus on those higher time frames. The hour time frame is really good, hour 4 hour, and daily. Now we can see that we do have this V pattern right here signaling to buy, but what about this A pattern right here? That's signaling to sell. And what I'm looking for are like these bearish candles, any continuation candles right here, like this hammerhead candle. Really looking for all these candles. So I like to be looking for these patterns before the market open, right before the market open. Like we can see right here, that V pattern already had formed within these 1, 2, 3, 4, 5 down candles, and we had 1, 2, 3 up candles. And we can see the V pattern starting to form. Like, you know what? We got our psychological level right here, 32,000. That's where we're going to put our take profit at. Boom, just right it up there. So let's go back over the past couple of days, and we can see that same thing happening. Now, overall, if we look at the market, guys, we're in a beautiful uptrend. These are the days where you're going to be able to capitalize the most, because for the past 4 days, we've been in a consistent uptrend. Every day we can see that this day broke new highs than the day before. Then this day we broke new highs. Then on Tuesday, broke new highs. Wednesday, broke new highs. So overall, these are the type of market conditions that you want to be looking for when you're trading, is those trending markets where it's just going up and down, up and down. But every time it's going up, it's going higher than the previous time. So let's go and look at the previous days and see if we can see any of those market patterns. We have a beautiful W pattern right here. Then we have our entry candle right here, 6:15 to 6:30. Boom, right it up to this psychological level, or this one right here, previous market structure. Boom, there's a beautiful W right there. Or you can just look right here for the W or the V pattern. Okay. Day before, we can see that we kind of were already in an uptrend. Monday was a little difficult, guys. I'm not going to lie. Monday was a little difficult to see, but we can see this big W pattern right here. And then boom, shoots up to that psychological level right there. Let's go the day before. Same thing. We kind of can see an overall W pattern. It's not going to be clear every time, But overall, what I'm usually looking at are these V and A patterns with a reversal or a continuation candle in it. So we can see right here, 6:15, we had our, I wouldn't call that a doji, I'd call it like a spinning top in a way. Could call it a doji, but right after that dipped down and pushed up very heavily. So I want you guys now, this is the most important part of watching my videos, is to actually apply what was being taught. So move that camera back a little. I want you guys to now go back on US30 and look at the days that I'm showing you. Maybe go back and look at the times and the V and A patterns. See if you can identify any of those. And maybe you can implement this in your strategy for US30. Hope you guys enjoyed this video. I will see you on the next one. Peace out, guys.